A lot has transpired in our country since the last press briefing in May. Allow me to address briefly the murder of George Floyd on Memorial Day by Minneapolis police officers who have since been relieved of their duties and now face criminal prosecution. Racism and bigotry have existed far too long in the United States. It is important that not just politicians and protesters speak out on this issue. All of us have an obligation to take responsibility for change. As the leader of the Port of Los Angeles, representing a diverse workforce of more than 900 employees, I condemn racism and all forms of discrimination and assert that Black Lives Matter. Civil protest is our right as Americans, and it is the first step in a process of engagement and healing in ways to promote social justice, dialogue, and necessary reforms for preventing tragedies like this ever again. I am proud of the leadership of Los Angeles Mayor Eric Garcetti has shown on this issue. I'm also proud of our Los Angeles Port Police led by Chief Tom Gazy. Our Port Police have been using community-based policing efforts for decades. It's important to our neighbors, our customers, our colleagues, and everyone around our port complex. As a jobs creator and economic engine for the country, it is my intent for the Port of Los Angeles to contribute to our nation's recovery and build opportunities for the America we all aspire to be. Now turning to cargo. For the month of May, Port of Los Angeles volume was down 30% compared to May of 2019. These volumes are very soft, as predicted in our previous press conference. It's the slowest May since the Great Recession of 2009. Key factors included America's shutdown economically due to COVID-19's pandemic. There's less consumer purchasing, less U.S. manufacturing. We also see the continued negative impact of the trade war between the United States and China and the policies that have been in place. We're also comparing the busiest month of May in our 114-year history, and that was May of last year in 2019. So the bar was set pretty high due to a strong advance of inventories during that trade debate. We also had a high number of canceled sailings due to a paucity of demand. I'll get to that in a moment as well. And we saw a shift of some vessel services from the Port of Los Angeles to Long Beach that amounted to about 10% of our normal business traffic. After 5 months of year 2020, we're tracking at about 19% behind 2019, also as we basically charted out in our last discussion. Although 2020 has been challenging, we've still been able to move about 80% of our normal volume for this time of year during the worst global pandemic in our lifetimes and a trade war that continues to hinder our programs going forward. There are a couple of positive notes. June canceled sailings estimates have eased somewhat compared to months recently witnessed, and those in May. Later this month, Zim's shipping line network will launch a 12-day express service from South China to the Port of LA, and I'm pleased that they chose West Basin Container Terminal at the Port of LA to call home. Zim last brought services to the west coast of the United States in the year 2015. For perspective, the San Pedro Bay ports of Long Beach and Los Angeles were down nearly 14% in the month of May and are lagging 2019 year-to-date by about 13%. Any notion of economic recovery in the shipping industry is a little bit too early to discuss. Those canceled sailings, as I've reported to you on numerous occasions, have been the largest we've seen in the industry in some time. Quarter one showed 40 canceled sailings coming to the Port of Los Angeles, and by the end of quarter two, we're estimating 23 ship sailings will have been canceled coming to the Port of LA. For the month of May specifically, we received and worked 60 vessels compared to 89 ships last May. In our other lines of business, you'll see that we're all in negative territory as well, with the exception right now of automotive. But we only had 2 ships in the month of May in the automotive sector, carrying only a little more than 1,900 units. And there are no ships scheduled for the entire month of June. So that positive year-to-date number will quickly turn negative by the end of the second quarter. In the scrap metal market, limited demand overseas and a slowdown in manufacturing globally have hindered this segment. We had no scrap metal vessels in the month of May. Demand has plummeted since the onset of COVID-19 as manufacturers have idled plants in the steel market, and the ongoing effects of the trade war have also impacted us here. For the cruise industry, no date has yet to be scheduled for a relaunch and future cruise sailings. We're still watching this very closely. And for our fruit segment, the perishable commodities, our season ended in the springtime without interruption and is scheduled to restart in December based on the crop in Latin America. On the labor side of our business, the men and women of longshore activities in Locals 13, 63, and 94 are also impacted by these two shocks to the supply chain. Week over week, our labor shift work is down nearly 4%. Year over year, we're down 19%. And by the all-important 3-year moving average, we're down 30% in labor work shifts compared to what we had been running since 2017. Less cargo means fewer jobs for the region. Truckers are also pulling less loads. And please remember that 1 in 9 jobs in Southern California's 5-county area are tied to the San Pedro Bay port operations. That's more than 1 million folks who would go to work with jobs related to this port complex in normal times. Our outlook for the remainder of 2020 is continuing to watch very closely the impacts of the China trade war and the COVID-19 economic shutdown in the United States, which have caused significant damage to the supply chain. We believe the effects of these two items will last throughout the balance of 2020. Also, the U.S.-China Phase 1 trade deal calls for $36.5 billion worth of agricultural exports from the United States to China in year 2020. The United States Department of Agriculture projects that by September, after 3 quarters of this year, that total will only be $8 billion US dollars. So we're lagging behind in the commitments of this Phase 1 China trade deal by the principals. Also, there are a number of questions swirling around the trade relations between the world's largest economies. Those have yet to be settled. And our traditional peak season is in jeopardy right now. Although we see some modest demand signals, some economists are predicting not until Q1 of 2021 will we start to see any noticeable economic bounce back with respect to consumer spending. That would mean a cargo uptick ever so slightly in the fourth quarter of 2020, but it's a little bit early to say that with any certainty. And looking to the future, I've said to our trade groups and other interested stakeholders that the Port of Los Angeles will need to reinvent itself. We, in my estimation, will have a permanent loss of 15% of our imports that won't return due to the trade policies. We are also facing, as always, fierce competition from other North American trade gateways. So our strategic focus will be on competitiveness, cargo fluidity, marine operations, that of our rail and truck activities to make sure that we're operating as smoothly as possible. And one silver lining may be that with the loss of imports, we may just have a chance to have a better balance of trade with imports and exports, which in effect could lower our cost to serve, making us a more desirable trade gateway. In conclusion, our business imperatives are as follows. I have called for a nationwide port community information sharing system so we can help United States exporters, manufacturers, our farmers, and others bounce back and reassert their competitiveness with effect to their customers overseas. Letting data and technology bring containers, rail and truck service, along with shipping schedules together to make sure that these companies have a chance to re-enter into our economic recovery. I have also called together and put together a West Coast coalition of business interests to answer that question of port competitiveness. It includes the 5 major container ports on the West Coast, the Employers Association, the PMSA, Pacific Merchant Shipping Association, longshore labor at the international and local levels, as well as the 2 Western railroads. Our work in this area will be focused on operations, financial investment at the transactional, as well as detailed level on digital and physical infrastructure, and the work that we need to do in the political and regulatory environments. We'll have a strong focus on U.S. exports, including agriculture, manufacturing, automotive, and their tiered suppliers. But most of all, at the Port of Los Angeles, we will continue to invest through cycle. where we have more than $367 million worth of construction projects that will be ongoing, equating to more than 3,000 manufacturing jobs right here at the port, to continue to build our capabilities at the Port of Los Angeles and earn more cargo, because that increase in cargo will mean more American jobs. And I'll stop there and field any questions we have from the group today.
Thank you, Gene. A reminder to the journalists on the call, if you've got a question, please either type them in the chat, the Q&A section, or raise your hand. We've got a couple to start with here. The first is from Stas Margaronis, American Journal of Transportation. Gene, in your discussions with the BNSF and UP railroads, are you satisfied that Port of LA importers and exporters are getting decent rail rates and reliable delivery times for their shipments to and from the Midwest?
Thanks for the question, Stas. And this is a big part of the discussion we're having within the competitiveness group of the West Coast business interests. We all realize that we've lost a tremendous amount of market share. In the case of Los Angeles and Long Beach, 20% of our import market share over the past 18 years. So that work has to be in those three areas I mentioned, of the operational, financial, as well as the political regulatory environments, and making sure that we're in lockstep with all of our stakeholders and partners. But I do believe there's a recognition across this broad spectrum of partners that we have to find a way to be more competitive than we are today, earn cargo from our mutual customers, and make sure that as it moves through our gateway, we become the gateway of choice.
Thank you. The next question is from Niraj at the New York Times. Any estimate for June and July cargo volumes?
It's a little bit early, but right now June is tracking about 14% behind the month of June of 2019. Again, very elevated levels that we witnessed, Niraj, last year at this time as we were heading into a traditional peak season that was pre-COVID, but also a time frame where we were trying to really move in as much inventory on the import side to stay ahead of any uncertainty around tariffs that may be implemented or milestones that had previously been announced. But about 14%, tracking 14% below June of last year. July right now has a lesser number of canceled sailings. I showed 6 on that slide just a moment ago. So early estimates are we'll probably trend below 2019, but not to the levels that we've witnessed now with my report for May.
Thank you. This is from Lisa Bartlein from Reuters. Do we have any forecast on the holiday-related volumes later in the year versus last year?
Yeah, I think it's a bit too early. Normally, I'd have a look at this, but Lisa, the uncertainty is just too great. We don't know how fast the American economy can reemerge, how quickly consumers can be out to the stores and our restaurants with normal or reemerging buying patterns like we've witnessed in the past. And with some of the states also seeing increased diagnosis of COVID-19 as they've begun to reopen, it's given me quite a bit of pause at this particular time. Now, I do know that testing is up nationwide, and in particular states, those metrics are very clear, but we just don't have enough certainty yet to be able to predict what that looks like. We've missed the spring fashion season. We've also missed some of the other mini spikes that we would see leading up to traditional peak season, and the demand signals right now are that we won't see anything of a really quick recovery and additional volume in the coming 2 months. But we're watching this very closely. And of course, with our nation's only port community system, the Port Optimizer, we're able to see what bookings look like overseas pretty early, and I just have not seen any real spike that would be of noticeable effect just yet.
Thank you. Matt Leonard from Industry Dive, following up on your comments regarding a nationwide port community system. Can you expand at all on that? What efforts are being made to create such a system, and how do you currently share data with ports that this system would improve upon?
Yeah, good question. We're working with the Federal Maritime Commission, Commissioner Rebecca Dye, who has been a long-standing advocate of trying to share information across all sectors of the supply chain. And as we've come to know through user discovery sessions and focus groups, our job here is to make our American ports more competitive nationally on the global stage of international trade. This is not a commercial play. It's not to look at somebody's data and try to sell it. We've proven that now by having our port community system in place for nearly 4 years. The idea is the quicker we can see what cargo is flowing, what is being planned to ship, how we can anticipate those vessels and the work that we need to do, the better we can communicate with our asset-owning partners, our longshore labor workforce, truck drivers, and those who really play a huge role in the physical movement of the cargo. We've talked about this for a long time, and I believe now as the American economy attempts to reemerge, we need to take a forward-looking step. And by sharing information through a platform of standardized milestones and the technology that we now have with application programming interface to speed data through systems, the time is now to act.
Thank you. A reminder, if anyone wants to ask questions, they can either raise their hand and we can bring you in via on camera, or you can type them in. The next question is from Eric Watkins of Lloyd's List. A PMSA report has drawn attention to the steady decline in cargo volumes through the San Pedro Bay complex. This is a long-term trend that started decades ago but has been hastened by the widening of the Panama Canal, as well as changes in trade routes caused by the Sino-U.S. trade war. Is this trend inevitable? Is it reversible? What, if anything, can POLA do to retain a high share of the discretionary cargo coming out of Asia?
There's a lot there, Eric, but I've been talking about this since I started on this job 6 years ago. It's all about competitiveness, and that's why I've put this group together with the great support of the folks I mentioned before, including Longshore Labor, the Employers Association, and the others. It's about what we can do better, how we can attract cargo, and how we can deliver value to the customers who want to use our port complex. Even today, we have more than 200,000 cargo owners that have shipments through this port of Los Angeles every year, 200,000. At the same time, I think we all now recognize in bringing people to the table who can affect change. These are C-suite decision makers. It's not just wrestling cargo between ports or trying to say we're up 1 month and brag about it or down the next. It's about real change that we need to make in our offering to the decision makers in the supply chain. The activities that we want to get after are in those three basic segments of how can we run our operations like a fine-tuned machine. How can we address the financial question? What do we do about the harbor maintenance trust? How do we get donor equity? And thus far, the competition basically is that we have collected the harbor maintenance tax. It's been distributed to our competitors so they could take market share from us. We need change at the policy level. And I know our David Libatique, Jen Cohen, and so many others have been working on Capitol Hill to try to get that done. We also need to make sure that our investments in physical and digital infrastructure have long-running traction as well. The deeper channel, the widened berths, the turning circles, all of that is imperative to us, but we need to do more and do more faster. And getting alignment with our elected and appointed officials, with those at the various agencies to make sure that we're not scaring cargo away is also a big part of this. So it's a huge lift. It's a generational change that we're asking for in the way that West Coast ports operate, and especially the Port of Los Angeles. But I think we've got enough momentum and a lot of people behind us that we can chip away at this.
Thank you. Another question from Matt Leonard, Industry Dive. Is there any commonality in the shippers that have seen their volume fall during the pandemic versus those who might have maintained normal levels of operations? Similarities in terms of industries mostly.
I think we look at these segments very closely with each reporting month, and what I could tell you is the same folks that you read about in the media are the ones that are getting hurt here. Those involved in fast fashion. We've already passed by spring fashion season, the holidays in the spring where folks are going out buying new clothes. That's gone. We've already bypassed now back to school because we're not so sure nationwide what our school year is going to look like, what distance learning is going to take effect, what physical distancing in our schools will look like, and how the children and their parents can be prepared for that. And now, as Lisa asked early in the Q&A, what is peak season going to be? And we still don't have the proper demand signals on that. But you've seen manufacturing shut down basically during COVID-19 from automotives to other American companies. That has impacted our lift. parts, peripherals, and components are usually about 25% of our import volume at the Port of Los Angeles, and those critical products have been down precipitously. We've seen some other folks that are also, because of their limited range, the restaurant industry at the wholesale level impacted tremendously. On the plus side, we have seen folks in home improvement and those retailers who have remained open through cycle, hardware stores. Some of the big box retailers have maintained a semblance of volume that is relatively normal, and in some cases a little bit higher demand, because those are the only places we could shop for the necessities we need at our homes, apartments, etc. So there is a clear line of delineation between those who have been hurt and those who have tried to ride this out as best they can, but it's been overall an impact of a 20% loss of cargo here at the Port of Los Angeles.
And a follow-up to that question, what are we seeing in terms of port calls in China, and what does that mean for future traffic in the San Pedro Bay?
Yeah, it's a mirroring effect. If we had 15 canceled sailings in the month of May, there was a corresponding 15 cancellation of origin departures. So we can see this very clearly, and we stay very close to our colleagues and friends who work overseas so they can help us look at those demand signals and sailing schedules as well.
From a phone caller, can you update on your role as Chief Logistics Officer and Love LA?
Sure. Love LA is getting a lot of traction. This is Logistics Victory Los Angeles. We were set up at the nomination of Los Angeles Mayor Eric Garcetti back on March 31st to focus on the critical protective equipment that needs to get in the hands of our frontline medical workers and our hospitals treating COVID-19 patients. Through a lot of sifting and a tremendous group of volunteers, mainly down here at the Port of Los Angeles, we were able to secure a 2-year contract with the Honeywell Corporation for 24 million N95 masks. These are the respirator masks that are so in great need by our hospital workers, and we were able to go and create a direct-to-manufacturer relationship. While others were looking to overseas markets and middle people and sales representatives, we were able to go direct to the great Honeywell Corporation. There are more products that are coming through as we create our own LA stockpile. We've said before the federal stockpile was non-existent, and unfortunately our California stockpile had been a little bit oversubscribed. So we went on our own, and with the great partnership of people like the Hospital Association of Southern California and the California Manufacturing and Technology Association, we start to assemble a really good network of partners that are coaching us up on a regular basis of what we need to focus on, but also how we can drive these great relationships in the supply chain and manufacturing communities to getting inventory on the ground right here in Los Angeles and out to our hospitals.
That appears to conclude the questions. If anyone has any final question, we'll let Gene close out, and if anything pops up here, either by raising your hand or in the Q&A, we'll do so. Otherwise, we'll have Gene conclude, and then we'll thank you.
Great. We always appreciate your interest in our business, and we will continue to tough it out through these very difficult times. But we do have plans at the strategic and tactical level for cargo and customer acquisition to make sure that we can continue to be that jobs creator that we always have been known for here at the Port of Los Angeles. So much work ahead. We've got a good team working around the clock and great partners and customers that are helping us as well. So until next time, we thank you again for your time this morning. Continue to be safe and well.